All right, you guys. Thank you guys for spending your Thursday evening with me. Lots of things you could be doing. Probably some of you guys will be watching some of the basketball playoffs while we're doing this. But pay close attention. I think tax foreclosure auctions are just a great way to buy properties, to eventually build wealth from the properties. Obviously, you got to know you've got to know what you're doing. And so I'm going to go through this through this PowerPoint. If you guys have any questions along the way, feel free to ask me. I've purchased properties at all different types of auctions, including tax foreclosure auctions. But I haven't done a tax foreclosure auction in many years, and a lot of things have changed. The regular auctions, the day-to-day auctions, I still do quite often, and most of you guys know that I coach investors, and so we're bidding on properties every day, courthouse steps, online. But tax foreclosures are they're special, in my opinion, because you get the best deals um, in terms of pennies on a dollar than any other foreclosure. And I'll go through this and I'll explain why, but don't be misled. Don't think that a house that's, let's say, after repair value is 250,000, you're going to be able to actually buy that property for 1,000 or two. That's just not realistic. And I'll go through this and explain why. If you guys have pen and paper, take notes. This is something now the Baltimore, I'm going to talk about Baltimore, also talk about DC, Prince George's County, and any other area in the DMV when their auctions are. I just mentioned that Baltimore Cities is May 18th. Um, Prince George's County is May 11th. And then DC is in July. They haven't posted a date yet or their properties. But most of the things that I'm going to talk about, most of the principles that I'm going to talk about will apply to any area. But we'll talk about Baltimore. Properties in Baltimore are sold at tax foreclosure auctions, sometimes for deep discounts, but most people never take advantage of this opportunity. So now you'll be able to take advantage of it because you're going to know how to bid on these properties. Why most people miss these deals. These are the reasons they don't understand auctions, and a couple of you guys have already mentioned that. They're afraid of making mistakes. They can't analyze deals, and you should have no problems analyzing deals, especially those of you who've come through my 4-day course, have been through some of my webinars, or my coaching students. You should know how to analyze deals. It's still the Mayo formula. And I'll mention this again, but I want to mention it a couple times. When we're buying properties as investors, we're buying at, as a cash buyer, we're buying at 70% of the after repair value minus repair costs. Now, after repair value, or what we call ARV, is what the house is worth once it's completely fixed up. That's ARV. And so we're buying at 70% of that minus repair costs. When you're a wholesaler, you're buying at 65% of the after repair value minus repair costs. Because there's a 5% difference, that 5% is your wholesale fee. Um, I'll call it regular auctions, normal foreclosed auctions, other than tax foreclosure auctions. I want you to buy at 60% because most of the properties that we buy at auction, we're able to go inside the property and see the properties. So I want you to buy at 60%. On a tax foreclosure auction, write this down, you guys, because I've already gotten this question. You should be buying somewhere between 20% of the after repair value and 50% of the after repair value. Between 20% of the after repair value and 50% of the after repair value. I'll go over this again. But I want to be clear on that because keep in mind, as much as the city or the county, they're having the auction primarily because they're not getting any revenue from the homeowner. They're not paying property taxes. And because they're not paying property taxes, the city or the county, they're not making any money off of them. And so they foreclose on them. Tax lien is the superior lien. They have a right to foreclose on them. And so all they really care about, to be honest, is getting that arrearage, getting the taxes that are due. For us as investors, we would like to just pay them for those taxes and be done with. But it's a bidding competition, really. And the property goes to the highest bidder. And so you want to make sure that you're not low bidding or low balling yourself. But at the same time, you want to bid high enough so that if you win, you've got a great deal. So my preference to you would be not to go over 50%, um, but you can go as low as 20%. Now, the higher you bid, obviously, the better chance you have to win. Now, let's say, for example, and I'll go over this again. Let's say, for example, the taxes that are owed to the city, taxes owed to Baltimore City is, let's just say $2,000. That's really all Baltimore City wants is the arrearage. They want the taxes that are owed. But let's say that $2,000 is owed to them in back taxes. But let's say that you bid on a particular property $50,000. You're not going to give that $50,000 when you win the bid. And so on May the 18th, May the 19th, you're not giving the whole 50,000. All Baltimore City wants on the 18th when you win the bid is that $2,000. And then the rest of the money, the 48,000, is when you close the deal. You guys with me? Is when you close the deal. Now I'm going to repeat this again. So you don't owe the rest of the money until you actually close the deal. Now, Maryland is what's called a tax lien state. And so you're not actually buying a property at the auction. We're not buying properties at the auction on a tax lien state as opposed to a tax deed state. And I'm going to repeat this, but I just want you guys to understand this part. Maryland's a tax lien state, which means when you win the bid, you're actually winning a certificate. You're winning a certificate and you're going to pay the $2,000. The seller has in Baltimore City for residential properties, I'm getting ahead of myself, um, is a 9-month redemption period. Most jurisdictions, it's a 6-month redemption period. Baltimore City for residential properties is a 9-month redemption period, meaning you win the bid, let's say on May the 18th, the owner of that property, they have 9 months to what they call redeem. So there's a 9-month redemption period and to pay the taxes. So if they pay their back taxes plus some late fees plus some interest, they redeem the property, they get to keep the property. And then in Baltimore, when you put up your money, you get interest on your money. Baltimore honestly has the lowest interest on their money on the money that you put up is 12%, which is really good. You're making 12% whether you win the bid or not. Um, and I just say it's the lowest because most jurisdictions in our area, it's like 24%. It's 24%. And so I got a little ahead of myself, but you've got to learn how to analyze the deals. This is where a lot of investors go wrong. And then a lot of investors don't know where to look. Here's where to look, you guys. As real estate investors, we teach you to focus on a targeted area. So you're not all over the place. You're focused on a targeted area. Let's just say it's a zip code subdivision. I would still stay there. Go with what you know. Know that in that area, know what the ARVs are, the after repair values. Know what repair costs generally should look like. Know what you should be buying those properties for. And so you want to stick with familiarity, or maybe a coach or a mentor, they know certain areas and they can give you good advice. Because tax foreclosure auctions are probably the best properties that you can buy in terms of the best deals. Now, it's a waiting period. And so if you don't have money to sit on, let's say the auction is, and I'll show you some examples in a minute, that the taxes are 2,000, 5,000, sometimes $10,000. If you don't have $10,000 just to sit on and draw interest for a year or so, then you shouldn't bid, because you're not even, if you don't win the bid, you're not getting it back right away. Sometimes it's a year, sometimes it's 2 years. But just know the time period that the money is out, you're drawing interest on that money. All right, here's what you'll learn today. How tax foreclosure auctions really work, how to find auctions, properties before the auction. And that's huge, you guys. That's huge. How to find properties before the auction. And so we do that. How to analyze deals. I just went over that, and how to avoid costly mistakes. This is me. I've been investing for over 30 years. That's actually an AI clone of me. If some of y'all saying that don't look like him, that's a clone. I look like Barry. Barry, you and I look alike. But I've been doing this for a long time, you guys. I've bought a bunch of different properties, a bunch of different ways. I've used different types of financing, creative financing strategies, lease options, subject to seller financing, wholesale, fix and flip, all the above. All right, what is a tax foreclosure auction? When property owners don't pay their taxes. And so we own properties. Everybody owns their properties, but they still have to pay the city or the county property taxes to continue to own the properties. When you don't pay the taxes, they can foreclose on you. Like I said, they're the superior of all liens, is the tax lien. And if you don't pay, they can foreclose on you. Now, in the DMV, Maryland, DC, Virginia, they're so lenient. Sometimes they'll allow you to go sometimes 2 or 3 years without actually foreclosing. Like, they're very friendly to the homeowners. That's why Baltimore even extended the redemption period. It used to be 6 months. Now they've extended only to homeowners um, to 9 months to give them an opportunity not to lose their properties. But if they go through with lots of warnings, um, you know, a year, 2 years, sometimes even 3 years, they can foreclose on you. The county or city sells the property or lien at public auction. Investors can purchase these assets often at significant discount to the market value. All right. Why investors love tax auctions? Below market opportunities, less competition, a little more competition in the last few years, and strong profit potential. And it's true. I mean, there's lots of profit in these properties. All right, step-by-step process. Property becomes delinquent, is listed for auction, and I'll show you a list in a second. Investors bid, and the winning bid acquires the property. Now, you don't quite acquire the property. In Maryland, DC, you, like I said before, you acquire a tax lien certificate. Once you acquire the certificate, you pay the back taxes, and whatever the overage is, you'll pay that later. The homeowner has, in this case in Baltimore, 9 months to pay their back taxes. If they don't, in this case, after 9 months, every other jurisdiction is 6 months. But if they don't, then in Maryland, you've got to foreclose on them. So you have the tax certificate. After the 9 months, now you have to foreclose on them. Um, the judges are always very, very lenient. They give them a chance. If they go in to court and they cry a sad story, the judge will give them 30 days and another 30 days to bring those taxes current. But sooner or later, they just get um, tired of it, and you're able to foreclose. You've got to hire um, an attorney to foreclose. Attorney's going to cost somewhere between $2,000 and $4,000. Once you foreclose on them, now you can actually purchase the property. So the shortest period of time, let's just say in Baltimore, is about a year. It's going to take about a year to purchase the property in Baltimore. So now a tax deed state like Virginia, once you win the auction, you can purchase the property right there. You're able to, it's a tax deed state, so you can get the deed as soon as you win the auction. In a tax lien state, you don't get the deed until you actually foreclose on the homeowner, then go to settlement, then you get the deed. Half the U.S. is tax deed states. The other half is tax lien states. We happen to be in tax lien states. Tax deed states are a lot better because you go to the auction, you win the bid, and then now you can actually go buy the property. There's no foreclosing. You don't have to foreclose on the homeowner. That's basically the process. All right. As I just explained, two types of auctions, tax liens. You collect interest. In most areas, to be honest with you, it's between 18 and 24% that you collect. So you put up the say 2,000, 5,000, whatever it is, you put that up, you're drawing in most cases 18 to 24%. Baltimore City for a residential property, only 12%. Tax deed, you may get the property. So you get the property right away. Baltimore says it's hybrid. It's only hybrid because there is a redemption period. After the redemption period and then after you foreclose, you actually get the deed. Okay, how to find auction deals. You can go to the county tax list. You can find them online, public record, investor networks. Finding these properties is easy. And I'll show you in a second. I use a site called Parcel Fair, Parcel, Fair, Fair, parcelfair.com. So that's what I use. I use Parcel Fair, but you can Google and get the list. You probably can go to ChatGPT to get the list. Getting the list is not difficult. In Baltimore right now, there's about 900 and I'm sorry, 9,411 properties going up for auction. That's a lot of properties. 9,411 properties um, going up for auction. Probably more than less than half will actually get to the finish line and foreclose, primarily because either the homeowner will redeem or an investor, while they're in the redemption period, will talk to the homeowner and negotiate a deal with them. Whether it's the investor who won the tax certificate or anybody else. We could actually call the homeowner now or while they're in the redemption period and negotiate a deal with them. um, to sell the property to us and not let the property foreclose. All right, what makes for a good deal? Kind of gone over this. Strong ARVs. And so my preference, just for me personally, I want ARVs at a higher number, higher amount. Because let's just say a property that it's like $2,000 or $5,000 in back taxes, there's going to be a lot of competition, and that 12% on 5,000 or 2,000, you're really not making a lot of money. Now, if you're able to get those liens, and then you've got to be careful on where you buy those properties. And so good location, you've got to be careful because you don't want to necessarily buy properties that in Baltimore or next door to a board up, or you don't want to buy a property. And I'm having a tax foreclosure auction tour. And so we're going to walk about 10, maybe 15 properties. And some properties we'll see there's like trees growing up in the middle of the property, board ups all next door. The property may be a board up itself. And so you want to make sure that you have strong ARVs. I personally want to buy in areas where the ARVs are maybe 300 to $500,000, just so that when I buy the property, when I eventually foreclose and buy the property, if I want to flip the property, there's a sizable profit. So 500,000, 20% of that should be my profit. Well, actually more than 20%, but let's just say 20%. That's $100,000. Or if I want to wholesale the property, win the bid, wholesale the property, there's enough room in there, there's plenty of room in there to make a wholesale fee. In most cases in Baltimore, though, I think you should in Baltimore hold the property. And so if you buy it low enough, now you've got better cash flow because your mortgage payment is lower. The rent, especially if it's a Section 8 tenant, a voucher holder, the rents are high. So in a buy and hold situation, you can make great profit. But you want strong ARVs, higher price neighborhoods. Higher price neighborhoods, you're going to get less competition. Manageable repairs, like I said, you don't want to buy properties that just need a ton of work, like full gut jobs. I would not buy a property unless I can put my eyes on the property. And my suggestion to you guys is never ever buy a property, even if it's at a tax auction, that you haven't seen the property. And that's why I'm sponsoring this tour, so that we can actually walk the properties. Most of them we won't be able to get in, but at least we can put our eyeballs on them. And then the inside is generally that indicative of what the outside looks like. And so if the outside looks really, really bad, the inside looks really, really bad. If we can't get on the inside, because some of the houses you can get on the inside, the doors are unlocked, but you can definitely look through the windows. That's why I say know your neighborhoods, know the ARVs in your neighborhoods, know what repair costs should be, but never buy a property, even at the tax sale, that you haven't seen. I've got many stories. I've got someone who's really close to me, I just mentioned this, that bought a property and called me maybe 2 weeks ago, maybe last week, and said, I bought this piece of land at the auction. I bought it sight unseen. Once I closed on the deal, I then did the research, and it's not a buildable lot. What can I do with it? I'm like, dude, you calling me now? Like, there's nothing you can do with it. The only thing you can do is the neighbor next door that abuts to your property, offer them the property, and they're going to want a huge discount. And so you've got to do your research, look at the properties. If you buy land, then you definitely need to know whether that property perks or not. Is it close to utilities? Does it have, uh, will you be able to hook up to the city or the county plumbing? You need to do all that. all that research before you buy. I mentioned this earlier that if you're into buying land, land is great at these auctions because you can get them at a huge discount and there's very, very little competition because there's not a lot of people buying land. And so if you're into buying land, these auctions are a great place to buy land. Know what your exit strategy is. Is it you're going to buy these properties and then wholesale the properties? Is it you're going to buy these properties, flip them, hold them, whatever it is, be clear on what that strategy is so that you know how to finance that property and exactly what you're going to do with that property once you buy it. All right, basic deal formula, the core equation. It is just the Mayo formula, like I just explained to you guys, including holding costs. And so run the Mayo, just like anything else. And almost everybody on here has been to a lot of my classes. Run your numbers. But in this case, you're going to do at maximum 50% of the after repair value minus repair costs. That's where you should be buying, somewhere between 20 to 50% of the after repair value. If you really, really want to win, then I would say you want to be closer to 50%. Um, Also, if you're able to get it at 50%, and that puts you in a great position, keep in mind 50% of ARV today is going to be different from ARV a year from now or after repair value 2 years from now. And so if you're able to lock the property up today at 50%, close on it, let's just say best case scenario in a year. And then if you're going to flip the property, you've got to go through getting your financing, going through permits, inspections, then putting the property on the market. This could be a 2 year process, year and a half, 2 year process. Our area, we're fortunate to be in the DMV where property values seem to always go up. In some areas, 10% appreciation, which means properties double in value in 10 years. And so you're going to gain an additional 10, 20% appreciation on that ARV. So that after repair value is going to go up during the time that you're controlling and owning the property. So if you're able to get it at 50% of current ARV, you're going to be able to tack on another 10, 20% of the after repair value. So now your numbers are looking better and better. Whether you want to hold the property or flip the property. So it's a good proposition to have, and it puts you in a really good situation. It's just that from start to finish, it may take a little longer than normal. Normally, we buy a property today, go to closing. We're in and out in less than a year, 6 months to a year, we're in and out. On these, it's going to be maybe an extra year, which means if you keep buying these, maybe one a year, you've got one of these properties, especially if you buy them in higher after repair values. And if you're flipping, I mean, you could be making an extra $100,000 a year off of one property that you bought a year and a half, 2 years prior. And you just keep them rolling like that. All right. You guys awful quiet. No questions? Um, Here's an example. Let's say purchase price is, I didn't vet this. Purchase price is 120,000, repair cost 30,000, ARV. Yeah, this is about right. 220. This is about right on a lower end. And so you've got a profit of $50,000, which is good. $50,000, which is good. $50,000 represents 20% of ARV, about 20% of ARV. With these properties, though, you probably can, the profit's a little higher than this. All right, mistakes that investors make, they overbid. And so I've seen a lot of people just are too anxious, want to win so bad to brag that they won that they overbid. Again, if you have a property or two that you want to get my opinion on, just send it to me and I'll give you the after repair value. So then you can work from there to figure out what you should be bidding. But now we actually have AI, and you can go to AI, you can go to ChatGPT or Claude, and I know a lot of investors are going there pulling comps and getting after repair values, letting ChatGPT or Claude run your Mayo formula for you. You can even tell them what's the numbers at 50% of ARV in a particular area. So we can use AI to help us in this process. Um, and then while I'm thinking about it, it's okay to not win the bid, you guys, because when you're bidding on these properties, um, and let's just say that you win, but the seller redeems the property, it's still a win because in most jurisdictions, you're getting 18 to 24% on your money. That's a huge win. That's better than having your money in the stock market. That's better than having your money in cryptocurrency. I just said that because Gwen is on here. Go ahead, Deborah.
Hey Greg, hi everybody. A question on that though. You do have that interest that you can earn, but didn't you already pay out cash to pay off the debt of the outstanding tax? So you've already paid that money regardless of what happened. So isn't that right?
Yeah, but the homeowner, if and when the homeowner redeems,
Mm-hmm.
they basically pay that money back to the city or the county.
Oh,
So
okay.
they're paying back the arrearage, the taxes that's owed, plus in this case 20%.
All right. So
So
then
now you're gonna get that money.
the benefit
You're gonna
is
pay the
interest
taxes back.
earned.
The city's going to put your money up and pay you the interest on that money. Now in Baltimore, it's not necessarily 12%. It is 12% if they keep it a year, but in Baltimore it's 1% a month. So if you keep it, if they hold your money for a year, then it's 12%. They hold it for 12 months, it's 12%.
And then as far as repairs are concerned, you can't do anything with the property until after the redemption period, correct?
Well, correct, but you can't do anything with the property until you own it. And so you've got to own the property first. So you're right in that you can't do anything with the property until after the redemption period, but really you can't do anything with the property until after the redemption period, after you foreclose on them, and then after you close on the deal, go to settlement.
And when you say that, Greg, when you say foreclose on them, that sounds like I am going through the legal process of putting them through foreclosure. Why isn't the bank or the city doing that? Like, do you mean that literally when you say it that way?
Yeah, you've got to hire an attorney and hire an attorney to foreclose on the homeowner. You got to, in tax lien states like Maryland, you actually have to foreclose on the homeowner. So you have to hire an attorney, just like a bank, a mortgage company hires an attorney to foreclose on one that's not paying the mortgage. You've got to do the same thing. You've got to foreclose on you. It has to be a legal action to get them out the property.
But a tax lien doesn't mean that it's not mortgaged. It's not a mortgaged property, correct? So
So I
why?
just use that. I use mortgage as an example, but in a tax lien state, it's not a mortgage, it's taxes. Um, they've gone over the period of time, the redemption period. So now you've got to foreclose. That's the only way in a tax lien state you can take over the property is you've got to foreclose on them.
I know, but just because there's a tax lien balance, that doesn't mean that the bank doesn't still own the property. That's what I mean. So why isn't the bank going through doing the foreclosure?
In many cases, the bank pays the taxes.
Uh-huh.
There's no issue there. So in most cases, the bank pays the taxes
Mm-hmm.
because the tax lien, like I said earlier, the tax lien is the superior lien. The mortgage lien is up under the tax lien. So if there's
Oh,
taxes due, they can pay the tax, they can foreclose, and the mortgage company doesn't get anything. And so in most cases, the mortgage company will pay the taxes. They'll actually also pay the insurance. Then they'll foreclose on you.
I
Now the
understand.
mortgage company is going to foreclose with the taxes paid up and the insurance paid up. And so if the homeowner is not paying the mortgage, they're not paying the property taxes, and they're not paying insurance, in most cases, not all, but in most cases, the mortgage company actually pays the insurance because they don't want the house to burn down. Now they're not going to get anything. They're going to pay the taxes because they don't want the superior lien, the tax lien, to wash them away. So they pay those out of their pocket. Then they come back and they foreclose.
How long does the process normally take from like start to finish? Let's say you pay the taxes and then you they don't pay the taxes back to the county
They
and then
don't
you
renew.
foreclose on them. Does it take a long time?
Takes about a year. Best case scenario takes a year. The city or the county gives you up to 2 years. If you don't pay it off, if you don't foreclose and pay it off, then after 2 years, then you lose everything. So they give you 2 years, but generally takes about a year to own the property. Go ahead,
So,
Barry.
so once you win the property in once you win the bid, you say you have to wait a year before you can apply for the deed or have an attorney foreclose. Who
No,
who pays that?
no, it's 9 months. So the
Oh,
redemption,
9 months.
the, the,
Okay,
the redemption period is 9 months, meaning the homeowner has 9 months to bring the taxes current, to pay the taxes.
okay,
If they don't do it after the 9 months, now you've got to hire an attorney to foreclose on them, and that's going to take another couple months.
right. So the owner has to pay the tax money back that you paid plus the taxes for those 9 months that have went past as well.
Right.
Okay, gotcha. All right, thank you.
Go ahead, Stephen.
Yeah, maybe I can offer a little insight because I've done this for since like 2017, and I didn't know as much. I didn't have this class back in 2017, so I lost a few dollars on it. But I've foreclosed on a few since. I got a couple in foreclosure, maybe 4 or 5 waiting to go into foreclosure. Uh, Prince George's County and St. Mary's County, who I'm familiar with. St. Mary's County only offers you 6% on your money. All right. And basically, I buy dirt. I buy lots, trying to assemble them and then sell them off. Uh, One of the things you want to look at when you're buying these lots or houses, I do I go to a title company and for, like there's one nothing pro title, $55. They'll do a title search for you, so you know if there's a mortgage outstanding on it. But and then one of the things I also do is I look at where if the, where the owner lives. If the owner lives out of state, it's more of it's a bigger chance those owners are not going to renew. Maybe air property or something like that. if somebody's living in California and the property's over here in say Eagle Harbor or down in St. Mary's County in Longview Beach, places like that, their taxes go uh, beyond what they should be, they're not going to redeem them. So I would say to each of you, always do your due diligence. You know, if you're going to buy something, it costs you $55 to do that. Do a title search, you know, and you'll know if there's a mortgage on it. And Greg's right. The mortgage company will pay you your money back. You know, and you'll get your money back, whatever the interest rate is. I think it's 6% in St. Mary's County, 20% in Prince George's County. They'll pay you your money back, the 20% plus any legal fees. You don't get interest on your legal fees though. So I mean this has been my experience. I've done it a while and I've been successful. So I just thought I'd drop in here. Maybe I can learn something else.
No, I appreciate that. Anything you want to contribute, I'd appreciate it. Somebody else have a comment?
Yeah. So it sounds so he's saying that the mortgage company will give you your money back after you go through the process of putting the owner in foreclosure?
Right. If the mortgage company wants it, they want that
Oh,
property,
mm-hmm.
they will go ahead and pay the taxes on it. But normally, like Greg was saying, I hadn't thought about that. If it's going to tax foreclosure, it means the mortgage company's not paying the mortgage, not paying the taxes either. But if they want to keep that property, the mortgage
They
company
will
wants to
pay
keep that property, they got to pay you the tax lien back plus interest and any legal fees you have.
Okay. Gotcha. All right. Thanks for the information.
And then Nancy had a question in the chat. She says, so you don't lose anything. Yeah, so Nancy, you're not going to ever lose. You can never lose. If you don't win the bid, then you didn't put up any money. But if you won the bid, and let's say you put up whatever, $5,000, um, at the very least, you're going to get interest. Like Steven said, in Prince George's County, it's 20%. In DC, it's 18%. So you're never ever going to lose. But you can win. Not only are you going to get interest on your money, you could win the house. And if it's a property in Prince George's County or in DC, wherever the case may be, you're buying it, in my opinion, at 50 cents on the dollar. And as time goes on, because it can be a lengthy process, you're gaining interest on that property. So you still have that asset is going up in value. So no, it's a win-win situation. Um, let's see, is there another question? Oh, okay. So underestimating repairs, we can't do that, you guys. All the principles that investors have or should have in terms of buying houses, these tax foreclosure properties is the same, not understanding liens. I think you guys should have a full understanding on liens now and the understanding of them. In most cases, the tax foreclosure lien wipes everything out. Almost everything, not a federal lien, but almost everything gets wiped out on the property. How to protect yourself. Research title issues, check the property condition. That's why we're walking these properties, you guys. It's very, very important to walk the properties. The mistakes that I see people make is they're making offers in the blind. Many people do because nowadays most of the auctions are online and people are just they're blindly making offers and they're making the wrong offer. They're not doing their due diligence. And so you want to check the property condition, know your numbers, and stick to your max bid, whatever that max bid is. If I was to tell you property value is ARV, after repair value is, let's just say it's 500,000, whether it's Prince George's County, DC, then you're going to run your numbers. You're going to go 50% of the 500,000, which is 250 minus whatever repair costs. And just to keep the numbers easy, let's just say repair cost is $50,000. If ARV is 500,000, in that scenario, you should only be offering 200,000. Go ahead, Stephen. You had a question?
It was another thing I wanted to kind of share with the folks. One of the things you can look at when you buy these properties and you get you're about to go foreclosure, going through the whole rigmarole, going through foreclosure. You can actually sell that property before you have to say you bid $250,000 on a $500,000 house. You can sell that certificate to somebody else who wants to pay, you know, you sell that certificate for $400,000 and they take it over. And you don't have to worry about coming up with $250,000 to pay that additional tax. Because normally what you'll have is when you go to a tax auction, at least the ones I've been involved in, you've got the tax, and then when you're bidding against somebody else, someone else might bid, 240. You bid 250, but you don't have to pay but whatever the additional tax, whatever the tax is, as opposed to paying that 250 right away. The taxes might be $20,000, but what you have to come up with $20,000. You have to come up with the other 200 plus $1,000 until you go to foreclosure. So what you do is you sell that before you go to foreclosure to somebody who wants it.
Yeah, you could wholesale these things.
Yeah, exactly. Well, I'm sorry, I'm taking.
You're good. No, you're good.
I just wanted to share some of this stuff.
No, that's good stuff.
I've done it for a while, and I bumped my head a couple of times. So I just want to share what I knew, and hopefully I'll learn something here too.
Go ahead, James.
Hey, Greg, loving this. I'm loving this education. My question is about the process, the procedures. When you go into these auctions, do they have a specific layout as to how they're auctioning? Like, do they say we're going to auction this particular zip code first, or are they doing an alphabetical order, streets, and all that?
Yeah, they auction them off. It's an online auction. Not forget the wording, but they auction them off in it's not parcels. I forgot the name of it. Maybe
Human
Steve
batches.
batches. And so so you'll know which batch is being auctioned off. And then you just shoot your best shot. You just make your bid on the property. If you really want the property, like I said, you should go in at somewhere between 20 and 50% of after repair value minus repair costs. But you're going to know on the 18th when the batch of the property that you want is going to be auctioned off. All right.
Hey, Greg,
Yeah.
I got a question for you. What happens? So let's say there's a property that comes up and for whatever reason, no one bids on it. Then what happens?
Good question, Gary. And so in every jurisdiction, there's and it's called different things, but what's it called? OTO, over the counter. And so the city will still sell the properties on a blind bid. In Baltimore, it's in the fall, in October. And I know that Valerie is on here. She might be able to talk about this a little bit because she's actually been down to the tax auction for the properties that didn't get bid on. And so they still sell them, and they sell them what's called over the counter. Now, Baltimore used to have a program called Buy Baltimore, where they would sell these properties, but they still sell them. And those are the ones actually, the ones that don't get bid on are the ones that you get even better deals on, because those are the ones that you can literally just pay the taxes. Uh, Valerie, do you want to add anything to that? I know that you and I think it was Akia went down to the auction and actually bought that list that Gary's talking about.
Yes, we did. Each of us, we purchased the book, a couple of thousand listed in the book. The book was $10 each. And it gave you the opportunity of going through and seeing what was left over, that you had the opportunity of going back to the office and purchasing.
That's Gary, that's in DC, that's in Prince George's County, that's in Baltimore. You just
So,
have to go down and see what got left over. And
okay.
for some investors, to be honest with you, that's their strategy. They want to see what the leftovers are and see if it's worth actually buying because now you're really not bidding against anybody. And now you're just literally, the taxes are 5,000, 10,000. You're literally just buying them for that amount.
So it's like first come, first serve. Like this is what's left and you see it and I want this and you just pay what's owed.
Yeah, it's in the fall. There's no date,
Okay.
but yeah, to answer your question, yeah, absolutely.
Thanks.
No problem. Morgan, did you have another question?
I forgot it. I'm sorry. But I mean, now I have another. So you're saying we have to wait until the fall to get that book?
Yeah.
Okay.
Yeah, there's no date. Actually, look for the date today when
Hmm.
I'm preparing for this. There's no date yet, but I remember our platinum coaching investors went down there last year. Uh, um, and a few of them, I know it was Valerie and Akia, maybe one more, went down there and they bought the list. You've got to buy it in Baltimore. And then you still got to go do your due diligence. You still got to go look at the properties, um, look at the repair costs, all those kinds of things. But the
Right.
leftovers are the ones that you actually get even better deals. Stephen, did you have a comment?
Yeah, yeah. At least in Prince George's and St. Mary's County, you can get that they call it assignment list basically, or over the counter properties. You can get those like a week or two after the auction. Like Prince George's County's auction is next, I think it's 11th, and you'll be able to get the all the properties that weren't sold. They'll be listed, and you can go in and look at them all, and they stay online all year long. And Prince George's and St. Mary's County is the same way. So, I mean, I'm not familiar with Baltimore, but I do know Prince George's County and St. Mary's County.
Yeah, every jurisdiction has the over the counter. And so you just have to look that up. You guys Google it, go to ChatGPT to find that information. But often, now sometimes those properties are left over for a reason. Nobody wanted to bid on them for a reason. So you just want to make sure that you take a hard look at those properties. Now, yeah, May 11th. Yep, May 11th in for PG County is the auction. How are you going to finance these deals? How's one financing these properties? And so, like I said earlier, I got the same question. You're financing these properties, to be honest, the same way that you would finance any other deal. Because since Maryland is a tax lien state, you're going to put up the money for the taxes in cash, cashier's check, whatever. And then once you go to finance to bring the rest of the money, once you foreclosed, you can bring that money to settlement in a form of a hard money lender, private lender, cash if you want. You could do JV agreements and pay it through with your JV partner. I wouldn't suggest getting a DSCR loan on these because they need some rehab first, then refinance into a DSCR loan. I don't know if Marvin's on here or not, but so you're going to finance them the same way you're going to finance any other investment deal. And if you have any other questions on that, you guys just contact me.
So you could do like a home style on one of those.
You
For
said you said home style?
yeah, it's like a 203K FHA 203K, but it's the conventional version.
You can do a 203K. You just need to make sure that 203K has limits. Well, number one, it's owner occupied, so you have to live in the property. And then they've got certain limits on the rehab. So you just got to make sure you fit within those limitations. But yeah, you can do a 203K. But
Okay, I'll
mine is
be good.
that's an FHA loan that's owner occupied.
Right, got it. Okay, thank you.
All right. Here's the truth. You can learn this online, but most people still won't do a deal. Why? Because knowledge alone isn't enough. Most investors get stuck because of the lack of three critical things: real world experience, guidance, and confidence. Before we move further, I want to show you guys something real quick. And so let's see over here. And so I subscribe to this site, Parcel Fair. And on Parcel Fair, let's see. On Parcel Fair, it's done all the work for you. It's done all the homework for you on parcelfair.com. You guys can actually get a 7-day trial. I pay something a month. It's not a lot. But it's done a lot of the homework for me. That's why I like it. And so it has map search. It has all the auction dates for all the auctions. This is Virginia, but it has DC. It has all these states that Parcel Fair is part of. And this is no promotion for Parcel Fair. I just like it because it just makes everything a lot easier for me. And so let's see. If I go to a list search, and let's say I'm searching in Baltimore, in Baltimore City. So I can put Baltimore City here, in Maryland, but I can put any county I want. I can put almost any state I want. But let's just say I choose Baltimore City. And in Baltimore City alone, let's see. Anyway, let me go. Let's see. Let's search. Let's just say I'm going to search on one zip code, 21229. But you can put any zip code here. They've got other filters, different types. We talked about over the counter. So if you want to search for over the counter, like Gary just asked about, you can click there and it'll give you all the over the counter in that zip code. But you can leave that blank and have give you all the over the counter in the city. You can search on all parcels or vacant land, improvements. I just put all parcels. And then availability, I've got all. You can put whether it's owner occupied. Stephen mentioned this. He likes vacant only, but I put all. If it's vacant or occupied, you can click there. Or if it's an out-of-state owner, you can click here to see if it and just click the out-of-state owners. In this case, in this zip code is 42. But I'm gonna go all. And so it filters out. And then if I was to search, it gives me the list in that particular zip code. And you can put any zip code that you want, and it'll give you the list of all the properties. And let's just say, for example, this one gives you the homeowner here, says it's available this year, tax year, amount of the taxes. In this case, is over $2,000. It says that the total value of the property is 137,000. The land is worth 25 building, but this is the taxable value. This is not ARV. They said that this one is occupied. And so if I click on the parcel, it gives me a picture of the property, but it also gives me actually ARV, their estimated ARV. It also gives me, if you want to buy and hold, it gives me the estimated rent. This estimated rent is about the right. That's what we're getting. Um, it gives you the when the auction is. Um, it actually gives you the tax record over here. If I clicked on that, it gives me the tax record, the SDAT of that property, and much more. Skip trace, if I want to skip trace to get their phone number, the owner's phone number to call. I can skip trace and get that number. And it also gives me the comps. So this is the after repair value comps if I want to buy, and it gives me the comps if I want to rent. All right here in parcel fair. Gives me a picture of the property. And so if I was to open up the panorama view, I can see the property right here. And it looks like it's a nice street. It's not, there's no board ups. At least it doesn't look like it. But I can look down the street. This is just Google Maps. Down the street. This is a great block. So this is a good property. You guys don't write this address down. No, I'm just joking. Let's see. Down the street, cross the street, and I can just toggle with this. That's around the block. I can toggle and just get a really good look at the block without being there. Now, my preference to you is actually go look at the property. But this particular property, 602 Wildwood Parkway, from here, it looks like a great property. Oops, did I come out? Oh, darn it. You guys bear with me. Um, Dang, I came all the way out. Did I come all the way out? All right, I came all the way out. Let me go back to parcel fair. Anyway, you guys get the picture, right? So I would recommend getting parcel fair. And like I said, you can get it for a 7-day trial. And so what I see a lot of people do is um, get it just for the auction or during the auction period because it's done a lot of homework for you. And so a lot of the properties that I want, that I like, I can just go here and they've done all the research for me. Is there a question? All right. Terry or Morgan, did you guys have a question?
Oh, I'm sorry. Nope. No, not here.
Okay, you guys hold on for a second. Let me get back to my PowerPoint. I'm sorry, I logged myself out of here. Let's see. All right, any questions so far?
I got one. Do you have any recommendations? Because I've got a attorney that does my real estate, does my foreclosures. Do you have recommendations on other real estate attorneys? Because I'm not entirely happy with the guy I'm using.
Um, I don't have a recommendation for um, St. Mary's in Prince George's County. I can give you some recommendations for Baltimore, but he focuses on Baltimore. Baltimore is like a different animal. He also owns a title company. His name's Anthony. I can get you his information. He may be able to give you one of his colleagues in St. Mary's in Prince George's County. And he may be able to help you as well.
Thank you. I mean, like I said, I've done this a while, and it takes about, like, again, in Prince George's County, if the property is occupied, you won't get your certificate for 9 months. But if the property is non-occupied, you'll get it in, say, the auction is next month. Well, this month, 11th. If it's occupied, you can't start your foreclosures until like December. If it's non-occupied, you can start your foreclosure whether it's a house or a lot, whatever. You start in November. So those are some other stuff that's good to know.
That's good stuff. Flander, did you have a question? Flander, you've got your hand up. Did you have a question? Uh, Something else, you guys, I want to mention that in Baltimore on Parcel Fair, it'll highlight where all the opportunity zones are. And the tax foreclosure opportunities in those opportunity zones. And so if you want to invest in purchasing properties in the opportunity zone, it highlights that. And what I like about that is one of the benefits of buying in an opportunity zone is if you keep the property for at least 10 years, now when you go to sell the property, you don't have to pay any capital gain taxes. And so there's a lot of investors that will buy their properties, buy them right, pay them down, pay them off, um, collect cash flow, and then after 10 years as a strategy, sell the properties and they won't get hit with whatever 15, 20, sometimes higher than that, capital gain taxes. And so I like that for parcel fair because it's going to show you where all those properties are that are being auctioned off in the opportunity zone. All right, you guys go ahead. Any other questions? I think I see a couple of hand raised.
Hey Greg, yeah, I have a short question, please. I would like to know if you buy something on auction, can you refund it back if you don't like it?
No. If you buy it and you don't like it, you lose your deposit. No givebacks.
Thank you.
Go ahead, Gwen.
Okay, so since the registration timeframe ended in PG County already, if for the stuff that doesn't sell, are you still able to participate in that if you missed the registration for this year?
Yeah, absolutely. The OTC? Yeah.
Yes.
Mm-hmm.
Okay, thank you.
Um, did I get everybody's hands up? I think so.
My
Let's see if,
hands up.
oh, go ahead. I'm sorry.
No, that's okay. I came in a little late. Okay, a lot late. And I didn't get the numbers for the repair costs for these properties. Did you say it's 20 to 50%?
No, I said that that's the after repair value. So, I mean, I'm sorry, the using the Mayo formula. So Nancy, you know that as a cash buyers are buying properties at 70% of the after repair value minus repair costs.
Correct.
Wholesalers are wholesaling at 65% of the after repair value minus repair costs. That's their numbers and how they're determining how they're going to buy the property.
Mm-hmm.
On these properties at the tax foreclosure, my suggestion would be to buy somewhere between 20% of ARV minus repair costs and 50%
Okay, perfect. Thank you.
in order to win. Now, sometimes there's investors like hedge funds, they don't want to win. They could care less. This is a strategy. They're going to go to maybe Prince George's County where they know they're going to get 20% on their money, and then they're going to bid on a whole bunch of properties um, with the hopes of them not ever having to buy a property. They just want that 20% because in their minds, other than maybe ETFs or some stocks, there's not a better place for them to park their money than the tax foreclosure auctions. And so you're bidding against individuals, but you're also bidding against companies and corporations and Like BlackRock, they bought a lot of properties down south, not in this area, at the tax foreclosure auction. Um, but like I said, a lot of hedge funds, they're putting millions and millions of dollars into buying these properties, um, and they could care less whether they win or not. They want to get that interest on their money.
Hey, good evening, Greg.
Oh, go ahead, Flander.
It's Kenny.
Oh, I'm sorry. Go ahead, Kenny.
Hey, I just wanted real quick. I met a guy at the DC tax auction years ago, and he was from Baltimore. He was coming out of there, and he said it's just exactly what you said. He bid it on the property, and he said, "Oh, I don't want the property. I just can't find where else I can get 18% on my money." And he said, "I don't really want the property. I just want to keep bidding on it to get the 18%." And that's exactly what some folks do. They just can't find a way to get that kind of interest on the
I
money.
mean, where are you going to get that? Like,
Yeah.
you're not necessarily going to get that in the stock market. I'm not going to say you can't because you can. There's some, like I said, there's some there's some stocks or ETFs really, um, like VGT and maybe QQQ, VU, those you can get over 20%. But other than that, where else are you going to get that kind of return? And the upside of it is you could look up and actually win. Now you're making even more money. Well, Keisha, go ahead.
Hi, I had a question. With the parcel site that you use, is there a way to upload the over-the-counter stuff when it gets released to that site and get that information?
Yep. Mm.
Okay, thank you.
Hey, Marcia.
Hey Greg, did you say that the Baltimore auction has not been announced yet, the date of it?
Yes, May the 18th.
Oh, May the 18th. Oh, okay.
The
Greg,
the
I had a
D,
question.
the DC isn't.
Oh, okay. DC has not been. And is that generally in the summer too?
It's in July.
Okay. Thank you.
Okay, go
Greg, I
ahead.
had a question.
Go ahead.
Can you explain the process if you win the bid and selling the property before you have to pay the like $250,000? How does that work again?
You mean after you pay the overage, you win the bid, you bid 150,000 and the taxes are 5,000. You pay the 5,000 when you win the bid. So you pay the 5,000 in May, and then you don't pay the rest, the other 145,000, until you actually foreclose and go to settlement.
Okay, that's what I was looking for. Perfect. Thank you.
Okay. All right. Bye. Thank you. All right. Morgan, did you have another question?
Yes, I'm sorry. I think I missed a little bit of it, or I'm just not clear on the part where if you, how are you getting the money back? Like you're holding the property and then you're getting interest. Do you have to make any other steps after you win the initial bid?
No.
After
Once, so once the homeowner redeems, then the city or the county, they'll they'll send you the money. You're not holding
Oh,
the property.
okay. So you'll make the interest back on your money if the homeowner redeems it. If
Redeem.
they, okay, and if they don't redeem, then that means you win and you move forward with the process of foreclosure, putting like doing all the next steps, or
Yes.
okay, got it.
James, did you have a question?
Yes, sir. I was asking a question about the overages. Are the overages held in some kind of trust?
No, you're not putting up the overage. You're not putting up any money until you go to settlement. So like I said, let's say that the one property I showed you, I think was around, let's just say it was $2,500.
Yeah.
Let's say the taxes owed is 2,500,
Mm.
but you made a bid of, let's just say 50,000. You with me?
I'm with you.
50,000, but the taxes owed was 25. You're going to pay the 25 now. But the balance of that, you pay later. You don't pay until you actually basically close on the property, foreclose, and then close on the property.
But do I have to show proof of those funds?
No,
Well, okay.
no. You're just going to pay the taxes now.
Gotcha. Thank you.
All
Hey,
right.
all right. Hey, I had a quick question.
Go ahead.
I know in some states there's like an upset period or whatnot. Does that apply for like DC, Maryland, and Virginia? Like you bid on a property that day, but I guess within the next, I guess, few days or weeks or so, someone else could come and upset your bid.
I don't know,
I
Stephen.
don't know, Steven, have you?
I haven't heard
I haven't heard it.
I've never heard of that.
I've never heard of that.
Never heard of that.
Never heard of that. No. All
Yeah,
right, maybe I'll do a little more research on that.
maybe that's some state,
That's some state.
but I haven't
I haven't.
heard of that.
I would think once
I
you got
would
a
think
deal
once you got a deal
with the state,
the state, they would
somebody can come in and
somebody can come in
take it from you.
take it from you. All right, thank you.
You're welcome.
You're welcome.
All right. So look, you guys, all that we're talking about, I am sponsoring a walkthrough, a tax foreclosure auction tour. And so we're going to walk through properties, we're going to analyze real deals, and we're going to learn what to look for. I did it last year with my coaching students. I thought I would do it again and offer this up to everybody. And so it's a 2-day tax foreclosure auction intensive where it's May 8th and 9th. It's in Baltimore. Day one is a virtual class where I'm going to do a training on um, exactly how, take a deeper dive into how auctions work, how to find deals, how to analyze them, how to avoid all the mistakes, some of which we talked about today, but it'll be a smaller setting and I'll take a deeper dive. On day two, we'll actually walk properties. And so we'll walk about, I don't know, 10, 15 properties. A couple of them we'll be able to get into, but we're going to actually analyze the properties, go over repair costs, go over after repair values, break down all the numbers, do everything that you should be doing. I will tell you for these properties what you should be bidding. And then if there's a zip code that you guys are interested in, whether it's Baltimore or any other zip code, I will give you guys a full listing of those properties. A full listing of those properties as part of this tour. Lunch will be provided, plus networking, um, debriefing, fellowship, all those kinds of things. And so, if you guys are interested in my live tour, you can go to bennettbootcamps.com. Here's where you can register, bennettbootcamps.com. There is an investment, but it's well worth it. And Stephen probably can testify. I've never met Stephen, by the way. I want to, but he can tell you he's doing these type of auction investing for a reason. Stephen, why do you focus on um, this strategy?
My strategy is a couple things. I just say they don't make any more dirt. Okay, so I'm trying to acquire as much dirt. Now look at different places where, like Eagle Harbor, Prince George's County, which is an old black resort town. Uh, Longview Beach down in St. Mary's County. At some place, these points are going to wake up. You know, people are going to move out the city. We're not want weekend places. So I buy dirt down there so people can build homes. And also I can make money off of the interest. And a couple of things I wanted to say. If you're buying these, like with the overages we were talking about, you pay $2,500 for taxes, but you bid whatever 40,000. You know, you don't have to come up with that until you start foreclosing, but you're not liable for that if you don't decide to foreclose on that property. all you do is you lose your $2,500. You're not liable for the additional $40,000, and you have 2 years, at least in Prince George's St. Mary's County, to foreclose on all any of your properties. I have purchased properties a year or so ago, that I'm just starting the foreclosure procedure on. Because it's expensive. I mean, well, lawyers are expensive, not so much the property, but lawyers cost you a little bit. So I said, I'll buy these while the opportunity is there. And now I'm starting to foreclose on properties I bought a year ago. So it's if you do your due diligence, you can make money off of this.
You can make a lot of money. What are you paying for attorneys to foreclose? Like 4 or 5,000?
About $5,000.
And so you guys work that into your numbers.
Yeah.
It costs
Again,
$4 or $5,000 to hire an attorney to foreclose for you. Work all that into your numbers just to make sure your numbers work. But if
but
you're
also
go
when you
ahead.
have an attorney, the homeowner, when they redeem, they have to pay your attorney fees too. You get all that back. But that's money that you spend your $2,500. I'm just throwing a number out there. You spend your $2,500 up front. But when you start foreclosing, you start spending money on attorneys and things like that. You get that back. You don't get interest on that on your attorney fees, but you get interest on your taxes. So you don't really lose because before they can renew that property, they have to pay your attorney fees too. And that's another that I think is an advantage because if they're not paying their taxes, they don't want to pay another additional $5,000-$6,000 in attorney fees to redeem their property.
Any questions? I see some hands up. I don't know if you guys have asked your questions or not. Any
Yeah,
questions? Go
I
ahead.
have two questions. So the first question is there a way to do this without hiring an attorney? Can you act as your own? Like, can you self-represent in this case, or you have to have an attorney to do some of these things?
I would imagine that you probably could, but the best thing to do is hire an attorney.
Okay.
But to be honest with you, if you're buying a property, let's just say on the high side, you win at 50% of the
Mm-hmm.
after repair value minus repair costs. That's a ton of money you're getting ready to make.
Right.
Like you could spend $5,000, 4 or 5,000 to hire an attorney to foreclose.
Mm-hmm.
I'll give you the money. I'm joking.
Oh, well, okay, well, that would be nice. But no, I was just thinking of if it was other ways to be more creative
No,
and spend
you're going
money.
to make like I said. Let's just say it's a house. Let's just say the ARV is even 300,000. Let's say after repair value is 300,000. You're going to buy that for 250 minus repair costs. And
Mm-hmm.
so let's say repair cost is $50,000. You're going to bid $200,000 on that property. No, my numbers are wrong. You're going to bid $100,000 on that property. You're going to bid $100,000 on that property
Mm-hmm.
with the after repair value of 350. You're going to repair it using 50. So now you're all in at 150. In this case, you got $150,000 in equity.
Right.
You can sell it and make
Right.
150. You can take 5,000 and pay an attorney to do that work for you.
Mm-hmm.
I'll front you the money, Morgan.
Okay, I'm gonna hold you to that, Greg.
Hey,
Okay, my
Greg,
second question was if they redeem the property and they come, they come back and want it, at that point is when you get the interest paid. But what if they don't redeem it and you move forward with the foreclosure part? Do you still get the percentage of interest back?
No.
Okay, got it. Thank you.
Any other questions? There's a question in the chat. It says, is this part of the tax foreclosure package signed up for the tour next week? I'm not sure what that question means. Is it the list? Is it the free list? Is that what you're referring to? If so, yes. When you sign up for the tour, you give me the zip code and I'll give you all the foreclosures that are for sale um, in that zip code. I'll give you the list. as a bonus. Any other questions, you guys? You guys learn a lot?
Yes, I did, Greg.
Yeah,
Good.
Great,
Absolutely.
very
great
Absolutely.
educational.
information.
Yes.
Yes, sir.
Somebody,
Great information. Thank you.
somebody give me one takeaway. What's your takeaway? We'll start with James. James Tadao, what's your takeaway?
My takeaway is for whatever you're getting ready to purchase on a property, whatever the lien amount is, be prepared that that's going to be tied up for at least 9 months.
Yeah, these aren't like you buy it today and close on it tomorrow, but it's worth the wait, and especially if you can stack them up like Steven. So Steven is saying he's buying them and maybe, I'm not putting words in his mouth, but maybe closing on a couple a year, and then he's just stacking them up and making, again, I'm not putting words in his mouth, but making couple $100,000 a year and just rinse and repeat. And he's not doing a lot of marketing to find properties. He's not doing a lot of cold calling. He's just going to the tax auction and finding these properties, putting them under contract, going through the process. And he knows that he's got up to 2 years to make it happen. And so he's just taking his time.
Yeah, my ultimate goal is to package these properties and sell them to a developer. But it ought to be that's my goal. You guys can have other ideas of what you want to do, but that's just what I want to do. I'm packaging. I want to bundle them and then find somebody to buy them.
Or somebody like Kenny Milner, he's retired. He could buy one this year, close on it a year or two from now in DC, make 100,000, buy another one next year. You're gonna have to bid on a few to get one, and then a year after that, and then a year after that, where he's always closing, buying and closing every year. And so that's a good strategy too, because with these, like I said, you're buying them for, in my suggestion, 50% on the dollar minus repair costs. You can't beat that anywhere, but you just have to be patient. And the money, the taxes money that you put up, you've got to be willing to sit on that for a long period for, let's just say, a year. But it's gaining interest. Any other takeaways, you guys? Or
Yes, Greg, if I may, I'm sorry, but I didn't hear the answer to Candace's question. She wanted to know if you have to put the money up front or show proof of funds in order to be eligible to bid. What was your answer to that one, please?
No, you don't have to show proof of funds or anything like that. But when you win the bid, you do have to pay the taxes.
Oh, okay.
What are these cities doing for accountability as far as anybody could bid on it and run the price up on you and then win the bid without having the actual funds, right?
Yeah, but they've got to put the money up, and then they'll just lose their money. And then it'll either go back on the auction block the next year or it'll go over the counter.
Okay.
Hey, Greg,
Yeah. What's up,
I,
Kenny?
I would like to say one of the things I've taken away from this, and I got on late and I apologize, but I would say do your due diligence. And like you said, ride if you can ride and see the properties, because I know people personally have bought who have won bids on properties in DC, and then only to find out it's a vacant lot that they can't do anything with.
Yeah. I,
So,
I
so,
hear those
so do
stories
your
all
due
the time.
diligence. Yeah, it's like, yeah, you want it, but you can't do nothing with it, and you stuck.
Yep. Yep. Somebody called me last week, and it was a lot, and there was nothing they could do with it. And I'm like, dude, you stuck. All
Um,
right.
I think I got we should get that parcelfair.com.
Yeah, it's a very powerful tool that it does cost some money, but you guys, it takes money to make money. And it just saves you a lot of time, or at least play with it for 7 days. Just get it, play with it for 7 days, and then get rid of it if you don't want it. All right. If there's no other questions or comments, I'm looking forward to the tour. We did it last year. It's a great tour. You're going to be around like-minded people. I'm going to walk with you, say 10 properties, and we're going to do an analysis on each one. And it's going to give you a good idea of how to bid, where the properties are, repair costs, all those kinds of things. And so it is a small investment. Go to bennettbootcamps.com, register. My platinum coaching student, you guys will be coming there with us. If we get too many people to register, we'll do it another day. But for the platinum, that this comes with your package. But bennettbootcamps.com, you guys, looking forward to sharing information with you guys and learning this process. This is a process that I've always, I did this many, many years ago and for whatever reason stopped, but I liken this to sort of like a semi-retirement plan where you can, like I said, described it about Kenny, use his name. But I see Cheryl on here too, who actually does a lot of flipping in DC, where Cheryl, you could be buying one or two of these a year, and then every year you've got two or maybe even three properties that you're going to flip that you bought at 50% on the dollar minus repair costs. So I think this will be good for you too, Cheryl. All right, you guys, that's all I've got for tonight. Take care, God bless, and we'll talk soon. Good night, everybody. Hopefully you guys get a lot
Good
out of this.
night.
Good night, you guys.
All
Good
right.
night,
Good night.
Greg.
Thank you so
Thanks,
much.
man.
Hey, Bear,
Hey, what's going on, Kenny?
I'm gonna call you in a few minutes.
Okay,
Good,
bro.
good night, all.
Good night.